Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, thanks as always for making time today.
Thank you for having me today.
So the U.S. markets were closed Monday for President's Day, but coming off a strong showing last week. European markets, though, up across the board. Asian markets, just the opposite. What's the story today globally?
Sure. Monday, U.S. market was closed because of the President's Day, but Apple said on Monday that it does not expect to meet its second quarter forecast for the revenue. The company cited that global supply constraints for iPhones and lower Chinese demand as a result of the coronavirus outbreak. Apple said that in late January that it expected revenue of $63 billion to $67 billion in its fiscal second quarter because of the coronavirus, that they were giving a big range of number. With this news, a lot of people are concerned about the first quarter economic slowdown due to the coronavirus impact. That has resulted into oil price decline as well as the long end of the bond rate falling on a global scale. People are concerned about the recessionary worries. Due to this, most of the Asian market has fallen, and it seems that the Korea have been affected the most.
Yeah, well, Korean stocks, as you say, down quite a bit over the past few weeks from the coronavirus outbreak, and today as well. What's it look like in the local markets?
Right, as you said, Korea's downturn seems to be much bigger than most of the other countries. Today, the Kospi is down 1.5%, and also Kosdaq is down 1.4%. The main reason for that is because people are concerned about the impact of the coronavirus. There's a new patient coming out from Korea, 29th patient and the 30th patient. And the question mark is how the 29th patients caught the virus. It's quite disturbing with that. So because of this, people are concerned about the economic activity slowing down much longer than expected. And therefore, Korean market have shown much bigger correction than others. Clearly, this was also same case for Japan. Japan has corrected as well quite significantly today. The reason for that is because of the same issues with the news that the cruise ship patients rose by 454. So clearly, people are concerned about the containment of the coronavirus issues. So all that is resulting into much weaker demand concern and therefore economic recessionary worries. And that is affecting the share price movement for Korea as well as Japan at this point.
And meanwhile, OPEC is having to prop up oil prices on expectations that the coronavirus is going to deal a big blow to demand. What exactly is happening there, and what's your outlook for oil?
Yes, the oil price were a little changed on Monday, but today the futures are indicating it is going down by around 0.75 to 1%. Clearly, the concern is over the fuel demand caused by the economic fallout from the coronavirus outbreak in China. But that is expected to be offset by some expectations of output cuts from the major producers, including U.S. even. So because of that, the price seems to be fairly stable. But nevertheless, we don't think that there's any possibility that the oil price can rise significantly from current level, even though the vulnerabilities that they may be cutting the productions. The IEA said that last week the virus is set to cause oil demand to fall by 435,000 barrels a day in the first quarter of 2020 from the same period of a year ago. So YOY number will go down by that much. If that's the case, then clearly oil price is not going to have any trend to rise in the future. Of course, hopefully that economic activity recovers in second quarter from the first quarter, that the demand for oil picks up. If that's the case, then yes, the oil price can rise from current $52 range to maybe as high as $60. But for the time being, people are still concerned how long this coronavirus outbreak is going to affect the global economy, If the numbers are not going down and there's continuing concern about the additional patients coming through in various other countries, then this concern can last till the second quarter of this year. If that's the case, then the oil price might not show any type of recovery. So we think that the oil price might remain at a box range, but much lower range than before. So more likely the oil price will remain somewhere between $50 to $55 range, rather than before $55 to $65 range.
All right, Mr. Yu, we'll be watching that in the weeks and months to come. We'll have to leave it there for today, though. Thanks for joining us, as always.
Thank you very much.